You're welcome back. This is Newsfile. It's your most authoritative news analysis platform, and here on Newsfile, we put Ghana first, and we will begin by getting to Immani to understand what it is that they have been talking about as far as the gold for oil is concerned. As far as we know about the gold for oil program so far, beyond what Immani is sharing with us, we also know that the Office of Special Prosecutor has, taken some people on and is investigating them over the gold for oil matter. There are certain persons who were in the lead, so to speak, of the gold for oil matter who are presently being held. We know that the Office of Special Prosecutor has detained Dr. Sledge Nanaya Ododu, Chief Executive Officer of the Gold Ridge Refinery Limited, after he failed to meet his bail conditions. He's under investigations for suspected corruption and corruption-related offenses linked to the Minerals Income Investment Fund, particularly in the management of the gold trade program. It is alleged that over 94 million US dollars was lost to the state through Gold Ridge Refinery's failure to honor trade settlements under the Gold for Forex and Gold for Oil initiatives. That's on the part of the Office of Special Prosecutor. 94 million US dollars, not Ghana cedis. Convert that into Ghana cedis, and you see that this big push, we are looking for money, we don't even have 13 billion every month. We have more than enough, 13 billion every month. We have more than every year out of the 10 billion US dollars that we are looking for. In the last 5 years alone, the Auditor General's report says in excess of nearly 80 billion Ghana cedis has been stolen by these big people and people in public office. And at the Public Accounts Committee, we are treating them with kid gloves and laughing. We're destroying this country. The corruption is just too much. So Professor Dodu and your team doing the national ethics and anti-corruption action plan, there's a lot of work for you to do. We understand that several others, at least about 11 people, if you put aside Nanaya Ododu, the Chief Executive of Gold Ridge Refinery, about 11 other people are being investigated by the Office of Special Prosecutor over this gold for oil and gold for forex matters. So, Immani did what it calls some forensic, checks, and found that we risk losing 7.2 billion in this matter. So we want to find out. That's Ghana cedis. We want to find out how exactly Immani comes to this conclusion and what should be done. They are calling for prosecutions and all of that, but what exactly are they seeking? Dr. Ishmael Yankson, chairman of the National Economic Dialogue, has seen Immani's work, and this is what he has to say from the work he has seen. He says, this is one of many such initiatives, often presented to be the answer to Ghana's poor economic performance, but in reality are meant to deceive Ghanaians and make it possible for individuals to enrich themselves while deepening Ghana's economic troubles. The revelations are frightening and clearly demonstrate how people in government have over the years connived with suspected foreign and local criminal agents to undermine Ghana's development efforts. The people, companies, institutions involved in the brazen attack on Ghana's future prosperity should not get away with murder. The government must demonstrate the resolve to deal ruthlessly with all those involved if the resetting Ghana agenda must succeed. Thank you. I'm going to begin with Bright Simmons, Honorary, Vice President of Immani Africa, to help us understand what they mean. Where did they come out with all of these claims? Bright, thank you very much for joining us.
Thank you very much, Samson.
Right.
Can you hear me clearly?
Very, very clearly.
Wonderful. And I think with your permission, can I just make a presentation to explain what we mean by gold for oil, etc., because that will help a lot of your viewers understand when we start to explain the losses and the origin of the losses.
Exactly my invitation to you, sir.
Thank you so very much. We're always grateful for these opportunities. So what we're going to be doing now is describing in some detail, within a short amount of time that we have, how the Gold for Oil program was conceived, how it was supposed to be executed, how it eventually was executed, and how through that execution we had already predicted, materialized, and eventually led to losses that we believe amount to losses to the state, which requires additional investigation and possible prosecution of those found guilty, that's criminally guilty, if any. So first of all, let's start off with consumption of fuel in this country. Fuel, like other commodities, have to be refined to be used. So there's crude oil, which is oil that you take raw from the ground, then you refine it into different kinds of fuel used for different purposes. There are fuel that you use in your car, typically called gasoline, or in Ghana we tend to call it petrol. There is diesel, which is very similar. There is aviation fuel, which is used for planes, marine fuel used for ships and boats and things like that, etc., etc. Kerosene, all of these are fuels. On the screen, you see that our consumption of fuel has been increasing quite dramatically. I'm only showing you for gasoline. And you can see that the amount of gasoline we consume has more than quadrupled over this very short period from 2000s until now. But there are other types of fuels, and this what you see on the screen now is a breakdown of some of the different kinds of fuels that we use. And what has happened over the years is because of weak industrial policy or problems in our industrial policy, we are not able to refine these fuels in our own country. We have to import them. Or at the very least, we have to import the vast majority of the fuels that we consume, the tonnage of the fuels we consume. And the amount of money, the dollars that we were using, moved between $250 million to about $400 million because as consumption grew, the more money we needed to import. What is funny though is that as consumption grew, the economies of scale should have improved, making it more viable to produce refined fuel in our country. Because the more you consume, the bigger the output is, and therefore often the more efficient your refinery plants will be. Even though we have two major refining plants in the country, the oil refinery and Central, both of them are not functioning to their fullest and their optimal due to weak policy. And this is what I call cartonomics, where we often are very clear what we want, and we define it often in political terms. So we want to, improve our ability to add value to our commodities. So we produce oil, we want to add value to it. This is something that every political actor in this country supports. This is something that everybody in this country kind of wants to happen. We want to reduce how much of our dollars that we use to import goods from outside, etc. However, when it comes to the how we actually do these things, somehow we disconnect the stated objective from the actual mechanics of getting the result. So we have this so-called economic problem that continues to bedevil us as a country. So in short, we've not been able to fix the oil refinery and Central, and therefore we keep importing fuel. Over the 2021-2022 period, as most of us know, the economic situation got pretty bad, and there was pressure on the currency, there was pressure on prices, so inflation was building up. The government wanted innovative ways to try and navigate those issues. And one of the suggestions was that because we have gold in our country, we could buy gold in cedis and then somehow use the gold to acquire oil, in which case we bypass the need for dollars. Because other than that, then you need dollars, about $400 million a month, to bring in the refined fuel. Why don't you simply take the gold that you have in your country, buy it in cedis, and then exchange it for oil, in which case you don't need the dollars. So the pressure on the currency, which builds up through the demand for dollars, will moderate. So that was the logic that was presented. The truth is, if you see the chart on the screen, I don't intend to go into any technical economics, but the general idea is for this to work, you need some kind of arbitrage. If gold is valuable, and gold is what we have, is valuable, and gold can be sold for dollars, but somehow you want to use gold to get oil, then the only reason you will do that, translating gold directly to oil is more beneficial than changing gold to dollars and then using dollars to buy oil. That would be the only logical reason why you will use a barter model or exchange your gold for oil. Because somehow the way that they are priced in the two different markets, the gold market in which you operate in your domestic market, and the oil market that applies where you want to get the oil, there is some dynamic between the two that allows you to exchange your gold for oil at a better rate than it would be if you went first selling your gold for dollars and then using the dollars to buy oil. So that would be the justification, the rationale for using a barter model instead of going to the market like everybody goes to the market. So the barter model will only make sense if somehow you've been able to establish that the exchange rate between gold that you get in your country and oil that you get in a specific market is more favorable than what you would get if you converted your gold to dollars and then use dollars to buy. This is just a quick explanation of basic commodity market, just so that when I refer to some of the issues, you understand what we mean. Typically, you have what we call the spot market, which is what you the market where you buy immediately and you are settled immediately. So I have money, I want to buy oil. I pay for the price as it prevails then. I hand over the money in the settlement and I collect my oil. So that will be a spot market. There are also what we call the futures market, where you are buying, even though you are making commitments today, the oil that you are buying is not to be delivered today, it's delivered in the future. And therefore, there's a forecast future price. And then you have a commodity supplier, you have a commodity demander, somebody who wants the commodity, etc. And then in between, you have people that often try to arbitrage between the spot market and the futures market. This is just a rough, quick, simple explanation because I'll refer to that again later on. Another thing you also have to know about the transactions that often if you're doing a commodity transaction, if you're changing oil to gold, gold to oil, things like that, you will often need brokers. You are doing a swap. Now, those brokers may be on the buy side or the sell side. It can get really complicated. We don't want to go into all of that. But bear in mind that sometimes if you want gold, somebody has oil, you have gold, and you want to bridge a trade. It's not all the time that there's an alignment in terms of who needs what when. So there are people that will often intermediate because they have storage capacity, they have distribution capacity, etc., who can play a role in making the match happen. And that's the difference between money and commodities, right? Because in money, I can just take your money, even when I don't need the money immediately, and I can use it whenever I want. With commodities, let's say you have an oil refinery and I have gold. When you need the gold and when I need the oil, the timing may not match. There could be timing mismatch, so many other mismatches. So often, a whole bunch of intermediaries develop to try and smooth the markets and create parity of need. And this is why this becomes interesting. So going back to the point again, for gold, for oil to make sense, you need to start to have another exchange rate separate from monetary exchange rates. And this will be the exchange rate between two commodities that you are interested in, gold and oil. So you build an exchange rate between gold and oil, and then you're able to compare it with the other alternative exchange rate, which is the gold in cedis, which implies a cedi to dollars, because if you sell your gold to get dollars, you have a particular exchange rate you're using. And then the other exchange rate, which will be oil to dollars, right? So you have two different exchange rates in play. So what you are trying to do with gold for oil is you're trying to bypass those two other exchange rates. You don't want to care about how much oil is sold in dollars and how much gold is sold in dollars. You want to immediately connect gold to oil, and you are bypassing those two other exchange rates because you think somehow you can get it at a more favorable rate if you did the direct transaction. So now that I've taken the challenge is what I've tried to explain is that often because the timing there's a mismatch in the timing, etc., you end up having multiple actors involved because you have one broker in between another broker, etc. Sometimes it's also a matter of volume. Let's say the person that you are trying to exchange your gold for oil with, they have a certain quantity of gold they need for a particular period, and they then have to aggregate on their side so that they can get more demand to match the amount of oil that you want supplied, etc. So these can lead to complicated multilateral arrangements as well. In short, you are often in a barter arrangement looking at the pros and cons, whether or not you are conserving capital versus whether or not you are getting the right amount of value, whether or not you have a relationship that allow you to get something at a better price than the open market, or if because of tax exemptions and things like that, it's much better to do an exchange than to do a direct trade. So there are two key issues we have to bear in mind. One of them is that there are transparent markets in oil, in gold, and in those transparent markets, typically we are dealing with cash. I want to sell my gold. I go to a transparent market like the London Bullion Market, LBMA, or Shanghai COMEX, any of these international markets. And there are so many buyers and sellers. So we have what we call price discovery. The prices are very well known, very well transparent, and they are often highly liquid markets. If you want oil, they are the same. There's the same situation. You go to oil markets. Rotterdam is a major oil market for refined oil. Antwerp, there are refined commodity markets also in Chicago, etc. You go there, you can buy as much oil as you want. In this case, it's refined fuel. You can buy as much refined fuel as you want. And based on that dynamic, there are indices like Platts, Argus, and the rest, which transparently broadcast the price to everybody. Now, if you decide that those things, those two kind of dynamics, those two markets don't suit you, the oil market as is transparently known, the gold market is transparently known, because for some reason you can trade directly, then you come into a situation where, as we are going to try and prove now, you have to show that the results that you got was better than what you would have got if you did in the open market. In the case of gold for oil, eventually what we learned is that there was actually no barter. That's the most critical discovery. And getting dollars. So it wasn't as if there was a refinery that had refined fuel to sell to us that wanted gold for some other reason, and we're brokering that gold to. It turns out that what happened is we were selling the gold to some intermediaries, getting dollars, and using those dollars to buy refined fuel on behalf of BOST. So there were traders who would sell oil to refined fuel to BOST, like gasoline and diesel and the rest, and they were receiving the dollars. So ultimately, the effect of the whole arrangement was that BOST became a major player in importing of fuels and displaced some of the private importers. Ultimately, I think it got about 30% of the market, that's approximately, down from what it used to enjoy before gold for oil came in. So the effect of gold for oil primarily was to increase BOST's market share. Remember though that if we wanted to do that, we could simply have just provided dollars to BOST on a loan basis and got BOST to import oil. I mean, if that's what we really wanted. So it's not as if we wanted to support BOST and make BOST a more effective player, we need to do gold for oil. I'm just explaining that one of the effects of gold for oil was that BOST, which was a state-owned distributor, acquired greater market share. Okay. Now, here is the problem. You got gold, which you are buying in cedis, and you want to get oil, which is sold in dollars, right? You end up still doing what you're doing anyway. The difference here, though, is that we don't really know who you are trading the gold with to get the dollars and who you are brokering with in order for the oil in its refined form to be delivered to BOST. So you had all these brokers that emerged, and I've listed some of them: Alpha Stream, StoneX, Abu Dhabi Capitalist Partners, that in the beginning were relatively well understood because we did investigations and we discovered who some of these players were. But even so, these were not disclosed publicly. Not publicly disclosed who these intermediaries were. But then things got worse. As the process unfolded, it became impossible for us to get leaks anymore to know who they were actually dealing with. So on the side of the aggregation, who was the Bank of Ghana using to buy the gold in cedis? What was the forex rate that they were applying? Because remember that gold has an international market. So even if I'm selling to you in Ghana, I have my mind that I can sell it internationally, and therefore there's a certain rate that I'm trying to use. And then what was the actual price that they were paying? None of this information was ever publicly disclosed. So they would do a deal in Ghana, they would buy the gold from aggregators, and then sometimes they would finance the aggregators. So that's where these gold rich issues come in. They will give money in advance to the aggregator to go and buy the gold and bring it to them in cities. And then when they get the gold, they have to send it to somebody else through another series of intermediaries to get the realized dollar. And then when they get the dollars, they then have to use the dollars to buy the fuel and bring it in. In each of these instances, there were no public disclosures of who these actors were, who was aggregating the gold on the ground, who was eventually bearing the risk of any loss that arise if you buy the gold at a certain price and the price moves in the international market in a way that you can't realize the dollar value. All those challenges arise from lack of transparency, is the opacity. That's what delivered those problems. So there are theoretical risks that we knew, which we warned about. And those theoretical risks include the fact that if you give money to someone to go and buy gold for you, the person may bring you less gold than you anticipated. The gold that the person brought to you, the gold content, because what you get is what you call DOR, which is a kind of gold that is refined to a certain point. The gold that is sold in the international market is often refined to 99.9%, etc. What you get from buying in the market in Ghana may be 90% or even less, or 92% or whatever. So due to all those dynamics, the prices may change and may shift. All of those dynamics require transparency. Now, if you miss, it's a loss. So this myth issue we are talking about is a similar problem, where money was given to some party to go and get gold on behalf of MEF, and over time it was realized that somehow, because of all these, instabilities in the way that the regime was set up, you accumulate loss over time, which ordinarily you shouldn't, because these are very mature markets. How did we get our loss numbers that we've put out? It's a very simple matter. We know the realized losses. The Bank of Ghana has already told us about the foreign exchange losses. And those foreign exchange losses arise simply because you buy the gold in cities at a certain rate, you are exporting the gold and you are realizing dollar in a certain rate, etc. And you eventually, those rates may move against you and you get a realized forex loss. There are also issues around the intertemporal, what we call it the intertemporal. The gold price are moving in a certain direction and you have the opportunity to accumulate reserves over time. So if you don't accumulate resource and instead you commit to certain prices, and therefore because you want to buy oil through this very murky process and the rest, you're not able to accumulate the reserves as a bank. So you don't benefit from the increase in prices in the gold price that you will have got if you were accumulating your reserves. There are also issues around the hedging and the basis risk that we've investigated. There are issues around import premia, etc. If you get involved in oil trading, there are so many of these different cost elements where if you do a counterfactual analysis, that's if the Bank of Ghana had not done that, what would have been the realized gain or loss? So we have just done a counterfactual analysis. And from 2.14 billion established by the Bank of Ghana itself, we've looked at all the other situations in which the Bank of Ghana could have avoided losses or made gains and which it didn't. And so based on that accumulation, we've come to the 7.2 billion number. Remember that number is an analytical number, because nobody really knows today what the full losses are. The engaged, reputable and auditing companies to go through everything and come up with a final number. So what Immani is doing is providing with a model that gives you a sense of how much loss could have been accumulated based on counterfactual analysis if we had done this other than that. And you can also use the same to query consumer welfare. So if, for instance, we hadn't done gold for oil, could that have led to, for instance, higher prices at the pump, or could that have led to a pressure on our currency, etc.? And the argument we've made is that neither case is true, because number one, we know for sure that they were not directly converting the gold for oil, right? They still went to get dollars anyway. And so they could simply have sold the gold, acquired the dollars, given it to the commercial banks or the BDCs through their auction process, as they already do as a central bank, because these BDCs were already supplying 70% anyway, even during gold for oil. So given all those facts, they will have done all of those issues, and then the pricing dynamics in the market will not have changed. In fact, if you apply our counterfactual analysis and you look at, okay, how much dollar would have gone into the market if the BOG had been more transparent in the way that it did this and passed the dollars through an auction process, the effect is that actually we may have had slightly lower oil prices during gold for slightly lower fuel prices during the gold for oil phase than we eventually did. So in effect, neither of the benefits were materialized. And the reason the benefit didn't materialize is very simple. The gold market and the oil market are highly mature markets. There's very little creativity you can apply as a small country in Africa to somehow try and game that market.
Okay.
If you want to sell your gold, sell your gold. If you want to go and buy oil, go and buy my oil. Buy them in transparent markets where you have multiple buyers and multiple sellers, and you get the best price discovery. So that's basically the analysis that Immani has done. Right. I hope this was clear.
Right. It was useful, but help me do this quickly. You say there was absolutely nothing innovative about the Gold for Oil program. This country needs about $4 billion every year for refined fuel imports. We had gold. There's been good price for gold. It is soaring. We are told even today that it's likely to end at about 4,000 per ounce, or is it ton in the per ounce by December.
Per troy ounce.
Yes. So there's nothing innovative about it. What do you think was the rationale? Why did we do it?
What was sold to us is not what was done. You see, if somehow the government have found a set of market conditions that allows to exchange gold directly for oil in a way that was more favorable than selling the gold for dollars and then buying the oil, then that would have been innovative, because that would be some kind of innovative instrument, maybe some kind of synthetic financial instrument with multiple hedge points, optionals, etc., etc. There are a lot of financial engineering that goes on in the world. And then maybe you find certain people that for some reason, they don't want to use the international gold market. They want to buy the gold directly for
Let me ask this question again. What is your suspicion? Because if by doing this, we have fuel prices at a rate which could have been lower, according to your analysis, what is your suspicion why this was done?
My point is that the eventual beneficiaries of this scheme were the brokers and the middlemen. The only person who got any benefit are the people that were in the middle, doing the monetization, that were in the middle, enabling the shipment of the fuel to bust, etc. They are the ones who benefited. Nobody else benefited. Ghana could simply have said, okay, we have our domestic gold purchasing program. We are buying gold in cities. We've sold the gold on the international markets at the current price. That money is in our reserves. We've auctioned dollars to BDCs who import the fuel. Because of that auction, there's more availability of dollars. That would have all been entirely transparent, and within the current policy set. Why did they need to embed middlemen that they didn't disclose at multiple levels of this program, when eventually, as we've now found out, they were still selling the gold for dollars and buying oil in dollars? What then was the point? So the only benefit to anyone is the brokers and the intermediaries, Alpha Stream and the others we don't know, and people like Goldridge or companies like Goldridge that have made a lot of money purporting to intermediate two markets that are supremely mature, and we don't need any intermediaries. It was done to enrich the intermediaries, is what I'm saying.
Right. Someone will ask what is new about that kind of model of business in Ghana. Because even if the Ministry of Agric was looking to buy toothpick, it won't go by it itself. It will find a middleman, so the middleman will benefit, and you will find later that this middleman is connected to some political something, and they're going to make money to fund some party. So this is not new. So what's strange about it?
The beautiful thing about your analogy is that imagine that we said we don't produce enough fertilizers in Ghana because our industrial policy has failed. So the likes of Bluefet and the rest are not producing enough fertilizer. We need to import fertilizer, right? And then the Ministry of Agriculture said, you know what? The way we are going to do it is that we are going to do rice fertilizer, right? We will get some people to go and buy rice in Ghana, and then we will go to Egypt or somewhere else, and we will exchange the rice for fertilizer. What would be the first thing that comes to your mind if they make such a proposal? Your first question you ask yourself is, why don't simply sell the rice, get the money and buy the fertilizer? Unless they can prove to you that somehow they have an effective means, because somehow there is someone that will, for some reason, rather than buy rice on the international market at a certain price, will like Ghana rice for some reason. Maybe there's something peculiar about Ghana rice. So if this was the only channel they will get a Ghana rice, then they will give you fertilizer at a rate that was better than if you try to buy fertilizer on the international market. So you give them the rice and you get fertilizer at a better rate overall.
Right.
In this case, we went in a different way, right? We went in the same way that I've just described, but it didn't make sense in the sense that we sold the gold for dollars, but at a rates that are not transparent, through brokers that are unknown, except those of us that do investigation. And then eventually we got the dollars and then went through the same route to get the fuel and bring it to Ghana, benefiting multiple middlemen and brokers in the chain. And our argument is that the only reason anyone wanted to do this was because they wanted a channel through which they could benefit and enrich some intermediaries.
Right.
And our argument is the country's resources cannot be put at the disposal of such schemes.
Right.
We cannot have a country where politicians...
That's understood. That's understood. My last but one question to you before I bring in Kojopoku is this one. That's, you know, right, we live in a crazy country, don't we? We go and cut down trees that have survived for decades in order to plant new trees. And when we plant the new trees, we don't take care of them and then they die. So the old ones that were surviving, we have cut them down. You remember? Yeah. You remember this project?
I remember it very well.
Thank you very much. This is what we do in this country. So
investigation.
Exactly. Yeah. Now my question is, these 7.2 billion Ghana cedis, its potential loss, you are not saying it is lost.
Yes, I think I made that very clear that the losses that we are describing are realized losses that have been confirmed by the Bank of Ghana, plus counterfactual losses. So it's an analytical point. It establishes the losses that we know for sure, and then it says that based on the way they did it, if they have done it in another fashion which was more transparent, and therefore the Bank of Ghana have built its reserves, you know, the auction market had worked as it normally works, etc., the ultimate outcome will have led to certain gains and certain avoided losses. And if you add all of that together, there's a potential that you could have made 7.2 billion cedi loss. Of course, we are waiting for that's why we did what we did. We are waiting for the audits that are going on the civil side, which is basically the Bank of Ghana audits and stuff like that. And also we are urging that forensic audits current, be instituted. And we know the OSP is not doing forensic losses, for instance, he's doing criminal prosecutions and investigations. So that's a different matter. But we're asking also for forensic audits. Every single intermediary, we know some of them because we've done investigations, but we are not authorities. They are authorities. They should investigate every single player in that particular scheme, every single trade in that particular scheme, and then look at the implied foreign exchange rate, etc. Because our analysis of the implied foreign exchange rate, our analysis of the implied premium, all of that has led us to this conclusion of losses.
Right.
But we are not a state auditing agency.
Right. I need a very quick...
Somebody else has to do the work.
I need some 30 seconds on this. You speak about tax exemptions. Did you find that these tax exemptions were granted by Parliament in the first place?
Well, the tax exemptions element of it, I don't want to delve into it too much because there are some additional work that is ongoing in that respect. Just as I also don't want to delve into the specific criminal liability attached to specific individuals and the rest because of the petition.
Okay.
So for that, I think you should bear with me. I will hold on to that for a while.
Right.
Because you know that there are already tax exemption matters that have eventually graduated into criminal liability for some people in this country. So, I'm
bringing on Kojopoku now, and he says that your document is as frivolous as it comes because, there is no name on it, no company or individual name is found on the document. And his simple question he's been asking all week is, first, that you put 7.2 billion cedis as the potential loss due to lack of reconciliation, and his concern is that this document, as you can see, the source document itself does not have such a figure on it, and again, there is no name to that document. Kojo Poku, thank you very much. He's Executive Director, Institute for Energy Policy and Research, and he's a member of the MPP communication team. I thought that you would think that this is fodder. This is important to go through, but I've heard you and others simply just rubbish it.
No, we've never rubbished it. Good morning, Samson, and good morning to Bright and all your panel and your viewers. We have never rubbished anything. I mean, we hold things to strict accountability and proof. That is what this country should basically strive to do. And Samson, before I continue, let me make a quick correction. Please, Sledge, that MIF program is not good for oil. I don't know why anybody wants to now cross the two. MIF had their own gold program that they were doing. If there are problems with that program to do with MIF, please, I'm repeating this on authority. That program was not part of Gold for Oil. And I hope you correct that, because that's Immani keeps trying to link the two, to try to say that people involved in Gold for Oil are being held by OSP. Sledge did not partake in Gold for Oil. Immani, so I really hope that we make that clear.
Immani didn't do that. I'm the one who did that because I have information.
Well,
I know for a fact. Hold on. I know for a fact that there are 4 areas under MIF that the OSP is looking at: the gold trade, gold for oil, equity investment, Ejapa transactions, and purchase of land. And a number of people who are very popular in this country will come in due course, as I understand it. But I'm the one who is saying the 12 people, the 12 people who are being investigated, the 12 people who are being investigated by OSP and who have actually been arrested, questioned and granted bail, except Sledge, who couldn't fulfill his bail conditions and was detained. These are the matters that are attracting the OSP's attention. But let's speak to it about this particular one by the Immani.
Let me also make another point. And clearly, you've held right to that proof, and he's admitted that 7.2 that they put out there is a counterfactual. The other word for counterfactual is phantom. It is not a loss. The only loss that has been recorded on paper by Bank of Ghana is 2.14 billion cedis, which I have a document from Bank of Ghana I've shared with you, Samson, for basically to talk about it. But you know what? Since Bright did his beautiful presentation, for me, I cannot do that because the document I'm going to rely on is basically documents that are subject to confidentiality. So it will be difficult for me to put those documents in a slide and share with the public. But I will read contents of those documents as I go along in my presentation. Let me make this quick fact. I want to now dwell on 3 areas. One is to let everybody watching and Bright, Immani, and everybody know that the Gold for Oil, everybody that took part in Gold for Oil went through proper due diligence. Bank of Ghana undertook what is called a KYC, and those companies were also sent to the FIC, the Financial Intelligence Center, for them to basically screen these companies. There are 2 letters that I would basically share with the public, the contents of it, right? One where Bank of Ghana rejected the company, and one that Bank of Ghana accepted the company when Bank of Ghana did their due diligence. Now, the second part will be the process by which the Gold for Oil processes went through from BOST to MPA to Ministry of Energy, then to the Bank of Ghana. Then the third part will be to discuss the environmental the idea of people trying to pollute the public with certain ideas that a program that basically came on board reduced premium from $150 to $80 to $50 from $50 to $80 was a bad program. These premiums we talk about are premiums that affect you and I, our pocket. But let me go on to discuss the due diligence that happened. Look, when the government, through cabinet, came up with Gold for Oil, it was not a program. They seemed to be obsessed with BOST. My brother Wright said that this program was done on behalf of BOST. No, it was never done on behalf of BOST. Those that ran the program was MPA, Ministry of Energy, and Bank of Ghana. BOST was only an agency of Gold for Oil. Anytime BOST wanted to do anything, BOST have to write through the necessary channels to get approvals. But let me now start off by reading you one letter. There is a company that, in that document that I call frivolous, a company called Cibet DMCC. Okay? When you look at, there's a document that's from Bank of Ghana on the, okay, there's a document from the Bank of Ghana. I'll give you the date. On the April 12, 2024, Bank of Ghana wrote, letter of engagement, onboarding Cibet DMMC onto the Gold for Oil. The above subject refers, please. We are pleased to inform you that Cibet DMCC has been successfully screened for anti-money laundering and combating and financial terrorism with the necessary Know Your Client KYC conducted and can be onboarded as a fuel supplier under the Gold for Oil. Now, this is a company that also got approval from the FIC that they can be dealt with, because the FIC screened them among other companies so that they can be, and anybody who cares to know, my brother Kojo Chimbwafo has all the files in FIC, they can go and ask them. Now, let me give you another letter, which is strange to know that there's a company called Goldstream Global. Now, Goldstream Global, recently, on the September, some date in September, right? 9th September 2025, Gold Board, this current Gold Board, have signed a 1 billion investment deal with Goldstream Global. It will surprise you that Goldstream Global was turned down by Bank of Ghana when they did their KYC, when they wanted to be part of the Gold for Oil. Now, I'll give you on August 8, 2024, Bank of Ghana wrote to BOST saying that the bank has reviewed the request from your institution on onboarding Goldstream Global as a fuel supplier under the G4O. After careful consideration, the bank does not recommend Goldstream Global as a supplier under the Gold for Oil. This same Goldstream Global today, Gold Board under the NDC has signed a 1 billion contract with them. But under the Gold for Oil, Bank of Ghana rejected them. So, look, this will tell you that there was a process in place where some people were subject to proper due diligence of Bank of Ghana and proper due diligence by FIC. Now, when the company is onboarded and they've been agreed to supply, what they do is that, look, as any other international oil trading company does, and in that document, they talk about people, single sourcing and all these things. Look, companies that supply products into Ghana, nobody does due diligence on them because it is a private transaction. Bulk distribution companies goes around to find their suppliers. I see that document talks about Netwise. Netwise today is supplying products into the market for BDCs. The way our downstream works, before a product enters our market, before a ship berths at the port, the ownership of that product has been transferred to a Ghanaian company, which is a BDC. So the issue of whether companies can perform or not perform is a purely private and commercial. And BOST, yes, companies were writing to BOST to be part for Gold for Oil, but BOST on their own never decided who becomes part for Gold for Oil. They write to the Ministry of Energy, to the Bank of Ghana, for Bank of Ghana to now admit, as I have now read to you in these documents. When these companies have been onboarded and they send their products into the country, the product comes in. There are charges that BOST charge for the rack rate, the unloading, the storage, and all those things, right? BOST in Gold for Oil was only earning a commission. Now they also charge for the storage and the racking and all those things. So what happens? The internal memos for BOST will now be generated for payment. So the GM4 trade will raise an internal memo. And I said it's unfortunate that because of confidentiality, I can't share some of these official documents online on the screen. But one of the things that happens is that when this document is sent, BOST now writes to NPA. NPA is the authority who regulates, who set the pricing and know how this thing works. Now, let me share an interesting letter and the contents with you so that you understand the role that NPA played in Gold for Oil. On the July 2nd, 2024, there was a letter that was written from BOST to MPA, and MPA was writing to the Minister of Energy. This is when, after BOST have submitted receipts and all the documents to MPA for payment. This is a letter that MPA wrote to the Bank of Ghana. Wrote to the Minister of Energy at the time. Request for payment to GMP Energy, Cyber DMCC, Netwise, and Polypro Trading. Now, it goes on to say that the National Petroleum Authority has received for request for payment from BOST, for payment to be made to these companies. The authority has reviewed the invoices and other documents submitted by BOST for each cargo, made the following observation. Now listen to this. There were no variation in the authority computation of the amount owed to Polypro. Now, authority computed the amount for gasoline supplied by Seabed, and they were higher than the invoice amount by $366. Then they go on to now say that they've done the computation for Netwise and they do not find any variation. Then MPA will put their recommendation. This is MPA's recommendation. MPA says that in view of the above, the authority hereby recommend the following: payment of this amount to be made to Polypro, payment of this amount to be made to Cybet, payment of this amount to be made to GMP Energy, and payment of this amount to be made to Netwise Petroleum. Then this letter goes to the Minister of Energy. Then the Minister of Energy now also does his internal investigation on what has been submitted by MPA before they write to MP. They write to the Bank of Ghana for Bank of Ghana to pay these companies. Now, the accounts that were held at CBG was only a view only for reconciliation. Who had control? How payments were made? How everything was done by Bank of Ghana. The head of Bank of Ghana of this program at that time was our own brother, Zachary Mumuni, who is today the first deputy Bank of Ghana. So I don't get this whole thing where somebody wants to make it look like there is this opacity that they use. A government program that has 3 institutions that went through: MPA, Ministry of Energy, and Bank of Ghana.
What was so special about this that when you needed gold rate, you needed to get them by sole sourcing?
Gold rate was not part of Bank of Ghana program. That's I have told you over and over. Gold rate was not part of the Bank of Ghana program. MIF is not the same as gold for oil. And I don't know why you don't want to understand that.
You have your information, I have my information, and I can tell you.
My brother, I am telling you that gold rate, you can double check that. I am telling you, authority, that gold rate was not authorized by Bank of Ghana.
Talking. Let me also talk some.
Gold for oil.
Thank you. I've heard you, but I'm telling you on authority that gold for oil, gold trade was eventually at the hub of MIF. Whether some will say it was imposed on them by the finance ministry or not, that's not the important thing.
MIF is not part of the gold for oil. Gold for oil had 3 institutions, 4 institutions: Bank of Ghana, MPA, Ministry of Energy, and BOST. MIF was not part.
Thank you.
I don't know where you get this MIF thing from. You keep pushing this thing. I'm telling you, it's not true, and you keep pushing it.
Kojo, you need to relax about this. I want us to deal with the facts. In fact, we are wrapping up. But you hold on.
No, hold on. You are stating something. I'm telling you it's not true, but you want to keep pushing it.
Yes, when you give an information, you don't force me to take it. Okay, I recognize the information you have given. Our viewers have heard. So thank you for that. Yes, Bright, quickly, and I need to wrap up on this. Yeah.
No, I'm not done.
No, hold on. Could you hold on?
Please, I'm not done.
Could you hold on?
Right, 1 hour on
Could you, I'm moderating this program. I'm the one moderating this program. I'm not giving you 1 hour.
What?
Bright was not giving 1 hour.
To go through
Bright was not giving 1 hour, and I'm not giving you equal time. Hold on. Bright, let's hear you.
But that was the point. Well, all the things that
please, production, can you cut Kojo off if you will not listen to me? Okay, Bright, let's hear you.
Force the point you've made. This is on the MIF website, the Minerals Investment Income Investment Fund website.
Thank you.
And when you look at that screen, For some reason, it's not showing on my side anymore. I don't know if you still see it on your side.
You go ahead and make the points.
Sorry?
Go ahead and make the points.
If you look at the MIF website, MIF is very emphatic about the fact that it took part in gold for oil.
Kojo doesn't know. Kojo doesn't know, but he won't take his time and listen. You know?
Well, I'm telling you that it's not true. I don't know which gold for oil tell that MIF took part in. It's not true.
So MIF says that this is what MIF itself says. MIF commenced the operationalization of the gold trade program in August 2023. The fund's strategic goal is to integrate investments along the whole value chain of commodities invested in. MIF, through its gold trade desk, has injected over $700 million into the economy. Trade has attracted total inflows of $719 million into the Ghanaian economy between August 2023 and July 2024 through its gold trade desk. And here is what MIF has traded foreign exchange amounting to $531 million over the period with the bulk distribution companies in support of the government's Gold for Oil program.
Thank you.
So what MIF is telling everybody is that it spent $531 million as part of Gold for Oil program, as part of Gold for Oil, and that settles it.
All right.
Because
no, it does not. No, it does not settle it. Because you see why it does not settle it. Let me explain why it doesn't settle it.
$531 million on.
Let me explain why it doesn't settle it.
Kojo, hold on. Kojo, hold on. For now, we don't need your explanation on what MIF is saying, but you hold on.
Exactly. MIF itself has made it very clear that they spent more than $530 million. And I think our viewers need to be told the facts. The second point is that all we are saying is if they wanted to involve the use of forex that is gained from gold in Ghana in bringing in oil, they could have done that directly. You don't need to have these brokers and
that point has been made. That point has been made.
You can sell your gold easily.
Well, why are you giving my time to try to repeat himself?
It's not your time. I determine what time is, how the time is used.
Yeah, but Bright is back on repeating himself.
It's not your time. Can you keep quiet and listen to him a bit, please? Respectfully. Can you? Yes, Bright, finish up.
Yes, I'm wrapping up. So what is important for your viewers to understand is that we've done serious investigations that have implicated specific government officials, specific companies, and that information in the dossier has been forwarded to the authorities for additional investigation. So this is not something that is phantom. This is not something that is, basically figments of our imagination. You, Samson, yourself have had some privilege access to certain aspects of the investigation, and you know for sure that these are very serious matters that the country ought to pay the greatest of attention to. Okay. I'm sure I can say that on your behalf.
Right. Thank you very much. And we know that you have to be off and going. We actually also are wrapping up here so that we can come to one of the biggest other issue, the Galamsey issue. Yes, Kojo, what's the point you need to finish up on? Let's hear you.
Okay, so let me quickly make this. There are two legs for Gold for Oil. There is the Bank of Ghana program of gold acquisition, which in Bright's presentation, he talks about the acquisition of gold through PMMC and then going into the communities to buy gold to now come in. MIF, as I am trying to explain to you, if MIF provided gold as they claim on their website, what I am telling you is that in the chain of bringing in petroleum products, in the payment for these petroleum products which were done by Bank of Ghana, in that value chain, there is no MIF. The program that involved bust, there is no MIF. If Bank of Ghana had a separate arrangement with MIF to be part of some other program, I do not have that information. Let's keep that clear. But there is a program that involves BOST, MPA, Ministry of Energy, and Bank of Ghana. That program did not involve MIF. Now let me quickly run. Let me quickly run.
This is what we are opposed to. This murkiness where it's not clear.
Let me quickly run up. Look. If somebody sits in their office and they say murkiness, opaqueness, use words like that, and if the trail of documentation, which they have not spoken to anybody, Immani have not spoken to nobody from MIF. Immani has not spoken to, Immani has not spoken to nobody from MPA. Immani, please, let me
Hello, Kojo. Kojo, you have already described a counterfactual analysis as phantom analysis.
Exactly.
And that was
exactly.
that was a wrong premise to start. You don't think so?
Exactly.
Counterfactual analysis. Immani has engaged with the documentation involved in this. And you call that phantom analysis?
Samson, if you start off by creating a certain scenario that $7.2 billion is lost, and you come and say that it's a counterfactual.
They didn't say that. They said there is the risk.
Yes, I said it inside.
There's a risk. They didn't say it's lost.
He said it's counterfactual.
Yes, counterfactual.
Right, said it's counterfactual.
But counterfactual doesn't mean phantom.
But it is. What does it mean? Go to Oxford Dictionary. What does it mean? It doesn't exist.
No,
counterfactual doesn't exist. It does not exist. It's phantom.
But financial analysis or economic analysis, when you say counterfactual, you are not talking about a phantom. You're using documents that you are familiar with, that you have used to produce a certain result. Somebody is using the same documents to also come to a different conclusion. That's the point.
No, my point I'm trying to get across to you is that when you go into the dictionary and look at the meaning for counterfactual, what it means in dictionary is that something that does not exist.
Finish your point. Finish your point, and let's go.
Let me write. Please stop it.
So why are you so agitated if some society is trying to bring transparency? You should be supporting.
I am with you on that. I am with you on that. We want
to objection if we are trying to bring transparency.
Let me land. Please let me land. Samson, you see, people make it look like some of us are against the investigation everybody's calling for. Everybody can do investigation because, like I said earlier, Immani has not spoken to NPA. Immani has not spoken to Bank of Ghana. Immani has not spoken to BOSS. Let me finish my point right, please. Immani has not spoken to any of these institutions. If anybody wants to do a proper investigation, you are more welcome to go to the FIC, to go to Bank of Ghana, to go to BOG. You will find all the files neatly packed for you to look at. Now, if somebody, my brother, let me speak. When you speak, I didn't speak. Please.
Immani, it's not correct. Where do you think our whistleblowers come from?
Samson, can I speak? Can you ask him whether I can speak? He spent 1 hour, I didn't utter a word. Now, when you have an institution that wants to put a document out there to the public, what we would expect Immani to do was to, one, have a document that has a name, has somebody's document that is been signed. That document they want to put out there talks about 1.2, 1.5 losses. It's debatable. All of a sudden, we are seeing something like, all of a sudden, we are seeing micro-feedback and sterilization and financing as a probable accounting thing that can be lost. The most important thing I want the viewer to understand is that Gold for Oil was a good program. If people feel that actors of Gold for Oil did something wrong, by all means, the institution should investigate and prosecute where they have the evidence to prosecute. But let's not sum up the whole program. People who are today in high position offices who supervise Gold for Oil, we try to impugn their integrity by trying to say things that we do not even understand ourselves. So the point is that let's not make it look like something that was done. Everybody has an opinion on why they think something should be done.
I think your point is made. I think your point is made.
Let me land on this.
Thank you. You've been landing and never landing. I need to stop.
Let me land on this.
Thank you, gentlemen. The two of you. Thank you very much.
Right.
He made certain allegations about Immani that I declare that we didn't speak to anyone. That's not correct.
I know that is not a fact, and we can ignore that because we know that Immani spoke to several people who are connected with this.
They have not spoken to anybody. They have not spoken to anybody.
They have spoken to many people. Thank you all, gentlemen, for making time to be with us. This is Newsfile, and we have been talking about the Gold for Oil program, which Immani's counterfactual analysis shows that there is a risk of a loss of 7.2 billion, and they are asking for a number of things to be done to confirm what they have found out about the program. As a matter of fact, by the analysis, they come to the conclusion that there was nothing innovative about it. It was almost unnecessary, and that without it, fuel prices may have been a little less than what we had at the time it was introduced. Bottom line, the gold that was being used for the purpose could actually have been sold and the money taken and given to the Bank of Ghana or the banks or the BDCs directly to do the purchases. The country annually requires about 4 billion to purchase refined fuel, and the BDCs have been doing this all the time. But this time, as far as Immani's analysis go, it was done to benefit the middlemen in a very opaque system. Sole sourced individuals giving contracts for which there's no benefit to us, but they were benefiting. And as you heard Kojo Poku, he denies all of these claims, says they are phantom, and what Immani is saying should be treated with contempt, so to speak. I take a break on a point where my little dictionary tells me about counterfactual analysis and construct, that these scenarios depend on credible, data-driven models of what might have happened in the absence of a specific event, policy, or decision. And by comparing these scenarios to actual outcomes, they estimate the true effect of that event or decision. Right. We take a break. When we return, Galamsey. The president met with the CSOs. He showed us enormous efforts, great efforts. The CSOs are asking for results. There are some who insist that he should not wait for national security advice to declare a state of emergency. Whilst they feel a little okay with what he's told them, some still believe that a state of emergency is not negotiable. We'll be right back.